Hi, everyone. What happened last week felt bad because we ended on a red note. In fact, we opened on a red note, but overall, the week was not red. It was either even or slightly green. The leaders were, well, there was strength in the IWM and the DIA. That looks pretty frisky, so we will watch that this week. As for the main indices, it was a push pull. From the mega caps. So they should have done more. They have all the best P&Ls and all the best performances, and they seem like to hold back just enough, almost like they're sandbagging. I will make the same note as last week. There was no noticeable weak areas. Gold is flying off the shelves because that's the natural response to a weakening dollar. Cutting rates weakens the dollar by policy. So for the short term, I will continue with the same mentality. Every dip, they're going to try to buy, and they are going to try to make a new high. This week's focus point is to see how this SPX S&P battle is going to play out. The white boxes have been the range, the targets by the market makers for the last 2 weeks, and they have failed to go anywhere with that. So we're still stuck in the same range for about 3 or 4 weeks, and we have left potential on the table. Are trying to get to 65.40 or 63.80. So we will have that resolution this week. As to what might get us there, we will have a jobs number on Friday, which will be the focus, and that is by design. So Powell told us that the Fed had shifted policy and will focus more on the prosperity, which is creating jobs. As far as guessing which way the market will go, I honestly, it's a tough game to guess because a lot of emotions. Logically speaking, good news should be good news. In this case, bad news should be bad news, but maybe some twisted way to look at it is if the bad news hits, then we will get more rate cuts. I'm going to wait and see and be ready for either way. The VIX, the so-called fear, had a spike. I did say a surprise spike, and we got this. To be honest, they're barely holding on to 16. Did you know the lifetime average of the VIX is almost 20? So this is definitely not inflated. My trading plan is still the same. I'm moving most of my delicate expirations out in time so I can have time to react. For example, if I'm short the market via a credit call spread, I want it out in time so I don't have to babysit it and I can take some heat. In the meantime, I can defend it by just buying calls and waiting. Conversely, if I'm long, I want to make it either a swing trade against some pretty serious support or shorting against some resistance or so in other words, I'm staying tactical, which means I'm trading more than investing. Enough chit chat. Let's get into the SPY. You can see how all-time highs, small dips will be okay, even if we come back to the 22nd. We have not yet retraced the spike from the 22nd. In fact, we are trying to establish it as footing. We are at the top of it. And if the bulls are able to stay on top of it and make higher highs, 650 plus, then we have another leg higher from here. 653, 57 are easily attainable. They just need to want to go get it. There's hardly anything standing in the way. For some reason, the QQQ looks a little bit more tired. This is a bearish scenario. That W you see there, they hit target 1. Target 2 is 566. Target 3 would be somewhere around 560. Let's see if this week the mega caps, the best companies on the planet, act shy one more time. There should be support at 566, and let's see if it works. Now, I have to tell you that all of the ETFs on a short-term basis, they have downside potential from wolf waves. Technical jargon to say, if we don't break out of 578 here, we are at risk of retesting the 560s, 558, and maybe even 552 zones. That's the easy way to say it here. It's not a drastic change. It's just if you don't break out, you're going to have to slip and fall a little bit and test some supports. For trading purposes, a comment like this would be interpreted in a way where if I'm holding calls, say for September or October on the QQQ, then maybe I can sell some covered calls against them for this week or next. This has been a beast, the IWM, the Russell 2000. It looks like it's at an all-time high, but it isn't. It is actually playing catch-up. This is its third approach into a failure, a massive failure, which is pretty important. Massive failures turn into massive breakouts if they take them out. The speed with which we are approaching is pretty phenomenal. And they don't have a star here. It's just 2,000 stocks. Each of them is a little piece. This one looks like the most intense potential breakout here. The Dow, it is at highs, and it finally got some steam. And 458 plus brings 463. This is a flag technical pattern. In fact, look left and you'll see exactly the same one here. They went up and they consolidated for a few days and then they busted out. If you have time this week, pop into the live room. We're doing some excellent work. We have become very powerful as a group trading. We hardly put a foot wrong.